what does that credit look like? What does that advantage look like?
Oh, that's
Please
a
do
great
tell.
question. That's a great question. You want to know now, don't you?
I do want to know. Where's my
It
spouse?
it
Get him out
it.
there.
Go get him. You could get significant amount of deduction in real estate. I'm just gonna throw out an example right now. Uh, the Let's say you buy a property for $1 million, and we're based out of California, so $1 million properties are it's hard to find anything cheaper than that. And what you do is you break the property down in between property and a land value. So there's a land value, obviously, in that $1 million included. That land value cannot be deducted. You cannot depreciate land because land is not depreciating. Land is just staying, or it's actually increasing in value. So IRS does not allow you to depreciate land, but we can depreciate property. And if you don't plan ahead, the deduction will be very small. Let's just take an example. $1 million property that you purchased, half of it is land, half of it is property. California, that's pretty common. If you're other places in the country, probably your land value is going to be a lot less than the property. We have clients in North Carolina who have 90% property, 10% land, which is a lot more beneficial because you want the property value to be high. The reason is because the land, again, cannot be depreciated, but the property could be. Right? We're on the same page?
Yeah.
So if you don't do any planning, that property value, in this case, the $500,000, has to be depreciated over 27 and a half years or 39 years, depending on if it's a residential property or a commercial property. So residential property, you depreciate over 27 and a half years. Commercial property, you depreciate over 39 years. In this case, my calculator is up again. You remember that one, right? It's coming up every time we do something. So $500,000 property value, let's say it's a residential property now, over 27 and a half years. So you get $18,000 deduction a year for this property if you don't do any planning. Now, the trick here, with proper planning, you can implement a cost segregation study into this purchase. And a cost segregation study is where you have engineering company come out to your property and breaks down the property in different components: roof, windows, doors, flooring, millions of things that they do. So they do a calculation, and this report typically costs anywhere from $3,000 to $5,000, $6,000 to do, but it's way worth the cost because I'm going to show you what's happening with that. In a $500,000 situation, roughly, again, depending on the property, depending on where you are, but I'm going to give you just a rough estimate of what it is. Roughly 20 to 30% of that could be deducted the year you purchase it. Just straight up. So $500,000 situation, let's say 30% of that, that's $150,000. Right now, the tax code allows you to deduct in 2025, deduct 40% of that. Used to be 100%. This is called the bonus depreciation, which used to be 100%, gradually went down to 80, 60% last year. This year is 40%. This year, talking about 2025. 2024 going down to 20%. But President Trump is right now talking about increasing that back to 100%, which, if you ask me, I think that would happen because this tax code is built around properties. And if you do proper planning with properties, you can save tens of and hundreds of thousands of dollars.
Is
So
that
if you
just a
ask
one
me,
time? Like a
that
one-time thing?
that's a one-time thing, and then the rest, whatever you don't depreciate the first year, you just depreciate over 27 and a half years.
Okay.
So in this 150,000 scenario, assuming the tax code would go back to what it used to be, where you were able to deduct 100% of your bonus depreciation, instead of getting $18,000 depreciation without planning, now you're getting 150,000 depreciation with a small planning and a small $3,000 to $5,000, $6,000 fee. So 150,000 reduce that with 18,000 that you were supposed to get, so you get $132,000 excess depreciation by proper planning. If you're in the top bracket, this could save you $50,000 to $60,000 in taxes the first year you buy it.
Wow.